Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And note that Bookmap Discord is free and available to everyone. It's a great community, a lot of very active traders, all working together to help each other become better traders. Again, a fantastic community, highly recommended. And I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. Excuse me, and when I talk about setups today, I will be focusing on an underlying asset. And for example, setups in the S&P 500 can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I'll be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, demo trader. Welcome. Glad you're here. Good afternoon to you, and thank you for the confirmation on the sound. All right. So sounds like all good on Discord and on YouTube. All right. Here's my agenda for today, Monday, January 22nd. First of all, I want to go over news items, economic data, and events for this week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And hello, Caesar. Welcome. Glad you're here. And Stephen, it looks like you're Stephen in Discord and Demo Trader and YouTube. Is that correct? Okay. All right. Great. All right. So when I get to the live market, if anybody has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right. Let's start with news items, economic data, and events for the week. First of all, there's nothing of significance today. And then tomorrow, Tuesday, Netflix, so beginning the large cap tech stocks, reports earnings after the market closes. And then on Wednesday, PMI data out at 9:45 a.m. Eastern Time, kind of medium impact. And then Tesla reports earnings after the market closed. And then on Thursday, the more significant data releases begin at 8:30 a.m. Eastern Time with durable goods orders and GDP. That could be a market mover. And then also, I believe the ECB will make their rate announcement sometime on Thursday morning. And then on Friday, finally, finally on Friday at 8:30 a.m. Eastern Time, PCE data comes out, and that was what apparently what the Fed looks at for their inflation information. So again, could be a market mover. All right, so that is the data coming up, the events for the week. Now let's move on to positional analysis. I'm going to start with the S&P 500. This is the ES futures and Bookmap. And before I take a closer look at this chart, I do want to take a look at the underlying index, which is SPX, in a larger time frame. I'm going to start with a one-day chart in Bookmap. So this is SPX, again, the underlying index, the S&P 500 index. This is the start of the rally that began on October 30th, ran into resistance right around 4,800. And then last Friday, options expiration, SPX broke firmly above that level with a huge rally on Friday. Again, that was January options expiration. And that level, 4,800, is now anticipated to act as support. All right, so that is the one-day chart, larger time frame. Now let's take a look at closer look at the levels in play recently. I'm going to go to SPX. This is a 30-day 1-hour chart. Here's the 4,800 level, acting as resistance. That was the end of last year. And then acting as resistance previous week, week before last, and then last week on Friday finally broke above that level with a rally that began on Wednesday last week. And now it looks like SPX may be consolidating. All right, let's take a closer look at some of the levels on this chart. I'm just going to zoom in a bit. All right, first of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. It's updated once a week. I update this over the weekend. The dashed blue lines are showing the lower and upper daily expected move, also based on the options market, and that is updated once a day. I update that at the close the previous day. All right, the dark red lines are showing Spotgamma levels, and these are proprietary Spotgamma levels shown to provided to Spotgamma subscribers for a variety of platforms. I'm going to point out the key daily levels. So first of all, the put wall is at 48.15. That's a strike with the largest net negative gamma that can be expected to act as support, and that's also the volatility trigger. That is Spotgamma's proprietary gamma volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, they have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive, and that's where SPX is trading now, above that level in a positive gamma environment. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility and can lead to more mean reverting price action, more range days rather than trending days. And then just above that is the call wall, and that you really can't see that label. That's right here at 48.60. That's a strike with the largest net positive gamma, and that can be expected to act as as resistance. And then finally, the absolute gamma strike is at 5,000. That's the strike with the largest absolute positive and negative gamma. So this is kind of an odd arrangement of gamma levels here. Note that the volatility trigger, put wall, and absolute gamma strike all shifted higher from Friday, so that's bullish. On the other hand, the call wall shifted lower, which I interpret as somewhat bullish. If a call wall in the face of a strong rally like Friday fails to shift higher, that is slightly bearish. So the call wall shifted down from 5,000 on Friday to 48.60 today, and the absolute gamma strike shifted higher. So kind of a mixed picture of gamma levels. Let's just take a look at a quick look at the absolute gamma for SPX. I'm going to zoom in on this chart. What this chart is showing is gamma for SPX. Orange bar is showing positive gamma or call gamma. Blue bar is showing negative gamma or put gamma. So here's that 5,000 level. That's pretty obvious. That's the absolute gamma strike, the strike with the largest absolute positive and negative gamma. And also the 4,800 level is very significant. And Spotgamma is looking at that level to act as support now. It was resistance for quite a while, and now potentially should act as support. And then just to be thorough here, here's the, there it is, the 48.60 call wall. That's a strike with the largest net positive gamma. Not really a significant strike, but the definition of call wall is, again, call gamma minus put gamma. All right, let's get back to the charts now. And finally, I do want to take a look at a shorter time frame, still SPX. And this is the current rally, in the shorter time frame that began last week, continuation on Friday, and then now consolidating. So let's zoom in on this chart so we can get a closer look at the levels in play for today. Oops, a little bit too much. All right, so here's the levels in play for today. The regular trading hours shown on the dark portion on the right here. So this combo level was in play. That's also the upper daily expected move for SPX. The ES upper daily expected move was also in play for today. Here's the call wall. Note initially acting as support. And then this combo level was also definitely in play today. That was kind of a flip level for today, acting as support and resistance. All right, so now SPX is trading below its call wall. All right, let's take a look at Bookmap now. In Bookmap, I have my own cloud notes. So I can show SPX levels. So there's that 48.64 level that I mentioned. Also the call wall, and then the combo 1 level just below that. Those were key, and I posted several screenshots with that cluster of levels acting as support, then resistance. I also have SPY levels on this chart. And for example, here's the SPY 485, that's a large gamma 3 level. And then finally, I also have, let me clear this, levels of interest for ES. There's the upper daily expected move, just about the same location as the upper daily expected move for SPX. All right, so those are the levels in play for today. I'll talk more about setups in a few minutes. And really the key was the reaction around these two levels, support then resistance. Also VWAP coming into play, that's the light blue line. All right, shifts in levels I mentioned before for SPX, volatility trigger and put wall both shifted up. Kind of a strange level at 48.15. Call wall shifted lower, and the absolute gamma strike, I showed that large absolute gamma at 5,000, so that shifted higher. For SPY, the volatility trigger also shifted higher, and the absolute gamma strike also shifted higher. So really on the surface, the shifts higher in levels were bullish, but the lack of shifts higher in the call wall, the shift higher in the call wall for SPY and the shift lower in the call wall for SPX were somewhat of a concern. And earlier today, with the S&P 500 trading above those levels, and given the strong rally on Friday, appeared to be a bit oversold. And Spotgamma typically considers price trading above a call wall as oversold. And that was kind of my, I'll talk more about my thesis in just a few minutes. So I had a primary and an alternate. All right, so those are the levels in play for the S&P 500. Note there is a difference in price between ES and SPX. And today it's right around 30 points. So ES minus SPX is 30 points. So I'm showing the 48.60 call wall for SPX at ES 48.90. And I do post the levels, the index relationships that I'm using every day in Discord. I try to get those in Discord by 10 a.m. once the numbers have settled out. All right, again, we'll talk about setups in a few minutes. Let's take a look at NASDAQ. NASDAQ, very similar, although the levels weren't, the interplay with the levels was not quite as clear. So this is the NQ futures and Bookmap. And before I take a closer look at this chart, I do want to take a look, first of all, at the QQQ chart. So we can isolate the levels in play for QQQ. And here's the call wall for QQQ at 424. And then there's a combo 2 level just above that, acting as resistance, more or less. QQQ definitely trading below that level today. And let's take a look at NDX. So that's a 1-day, 1-minute chart. Let's go to NDX, and we'll see that combo 2 level also in play. The rally that began last week. Now we can zoom in and see that combo L2 level. So the combo levels combined for NASDAQ combine NDX and QQQ gamma weighted open interest into one level, in this case converted to an equivalent NDX price. So here's that combo level for NDX and the QQQ call wall just above that. And the call wall and also the QQQ NQ, that's the 17,550. I've got the number wrong there, so that's the 550 level acting as resistance for a short. copy and paste error there in my spreadsheet. All right, for NASDAQ, for NDX, the volatility trigger and absolute gamma strike shifted higher, just like SPX and SPY. And then for QQQ, the call wall and absolute gamma strike shifted higher as well. So absolute gamma strike shifted higher for SPX, SPY, NDX, and QQQ. All right, let's take a look now at gamma notional, and then we'll get to some setups. Go to gamma notional. This is market maker's position on the gamma curve at the beginning of the day. I look at this every day. It gives me an idea, a sense of how market makers may react to changes in price and implied volatility in a positive gamma environment. Note that SPX SPY, well, let me just back up just a little bit. So this chart is showing market makers' position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note for the S&P 500 and NASDAQ, all these numbers are positive. This indicates market makers' position on the gamma curve is positive. For an index, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. For the SPX and SPY, those numbers did shift higher from Friday, more positive for SPX and from negative to positive for SPY. The numbers shifted lower for the NASDAQ, but still positive, and then shifted higher for the Russell 2000, but still negative. All right, I'm going to skip over the Vanna model. Not much to see there. So my thesis, there were really two theses. I had alternate and a primary. So primary thesis was just looking at number one, bullish, based on the shifts higher in the levels for the S&P 500 and NASDAQ. And number two was bearish, based on the SPX and SPY, both trading above their call walls and considering that oversold. So looking for, and this is ties back to the expiration Friday, also looking for some consolidation after all that call gamma that expired Friday. So looking for a little bit of release of that call gamma again and some consolidation or weakness. And that so far that is the that's kind of been the primary or the thesis that has played out the most, a very bullish opening and then a reversal lower. All right, so let's review some setups now. I'm going to start with the S&P 500. Very interesting day today. I'm going to start by looking at what options traders have been doing today. This is the hero signal. This is available to Spotgamma subscribers. It's shown. This chart is showing again hedging impact real-time options. So everything that we've looked at so far, other than Bookmap, is based on static data. So the gamma levels, everything else, gamma notional, based on static data that's updated once a day, and that's information that I use in my planning process. And now we're going to move over to the execution process, look at real-time data. So this is again real-time data showing price for SPX with a white line, and options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures, all into one combined signal. All right, note this chart is showing the hero signal beginning. It looks like it's beginning on midnight. So note that, let's take a look at SPX, see if that's, so SPX options and ES options do trade before the cash open. Now SPY options, which is another component of this combined signal, begin trading at 9:30 a.m. Eastern Time. So let's go back to the combined signal now. This is what I use for the S&P 500. So I just want to show this, and this comes into play for the initial setup, which was a long that I'm going to talk about. So note this hero signal really starts to ramp up right here, somewhere between 8:30 a.m. and 9 a.m. Eastern Time. Starts to ramp up and continues higher at the cash open. And then there was a pullback to the call wall. And actually that was a pullback to the combo 1 level, just 1 point below that. That combo 1 level combines SPY and SPX, gamma weighted open interest, into one level. All right, so let's go take a look at Bookmap, and we'll focus first of all on the long setup. Go back to Bookmap, go to ES. Going to zoom in, and give me just a moment to adjust this chart. So remember, traders were taking positive delta positions. They were buying calls and or selling puts in ES and SPX before the cash open, and then at the cash open they that just accelerated. Price move higher. There were some large traders in buying with iceberg orders. That's shown by the on-chart indicator there. That's 929 contracts. Also, this move higher was fueled by buy stop orders, shown by the rising yellow line. Also aggressive buyers. That's shown by the green volume dots. The volume dots show market buy minus sell. Magenta dots indicate more sellers than buyers. So there's a magenta dot, more sellers than buyers. And then the green volume dots indicate more buyers than sellers. And if you didn't catch this first entry, here was a good alternate entry point. Again, right at the 48.59 combo 1 level. And this cluster of levels acted as support and resistance. So there was the first setup. So we know that traders were taking positive delta positions. Aggressive buyers were buying. Buy stop orders fueling the move higher. And then also large traders buying with iceberg orders. Let me zoom in on this just a little bit more so we can zoom in and see that in this very short time frame, kind of like Bruce likes to take a look at, ES was making slightly higher lows. So a good entry point at 48.60. So the call wall in this case acting as support. All right, so that's the long entry. As traders again were taking positive delta positions. All right, let's go back to Hero now. And just to make this a little bit easier to look at, I'm going to turn off this extended hours now. And let me actually, before I do that, let me just point out the notional value here. This is pretty high number. So what I'm looking at is this number right around just before 1030. That's over, it's like 4.6 billion notional value. So that's pretty high, especially that early in the morning. Right now I'm going to turn off the extended hours. So just look at Hero from the cash open. So there's that very bullish move higher, pull back, and then the move higher again. And then after that, the Hero signal really stops making higher highs, levels off, and then finally drops lower just right around 1030. So traders, when the Hero line is rising, Hero signal is rising, again, that means that traders are taking positive delta positions. They're buying calls and or selling puts. And then when the Hero line drops, that indicates they're taking negative delta positions. They are buying puts and or selling calls. Market makers take the opposite side of those trades. So with a rising Hero signal, again, they're taking the opposite side of those trades, and they have to buy futures to hedge their delta exposure. And when the Hero signal is dropping, traders taking negative delta positions. Again, market makers are taking the opposite side of that, and they have to sell futures to hedge their delta exposure. So I'm talking about traders buying and selling puts and calls in SPX, SPY, ES, and XSP. And the most efficient way for market makers to hedge those trades is with ES futures. So that's why I spend so much of my time focusing on the SPY and SPX levels on my ES chart. All right, so note at this time, ES made a series of higher lows. Let's just take a quick look and see what traders were doing with puts and calls. So really this, to me, this does not provide a lot of clarity over the total signal. So I'm just going to go back to that. Sometimes it does, sometimes it doesn't. All right, let's go back to Bookmap now. So we know right around 1030, the Hero signal shifted lower. Let's go back to Bookmap. All right, so there's that series of lower highs in ES, shown with that trend line there. Good entry point. Short right at this 48.64 level, combo 4 level, and this upper daily expected move just above that. Note that large traders were selling this move higher with iceberg orders. That's shown by the falling light blue line. Large traders fading that move higher. As options traders started taking negative delta positions and price breaks below or after making a series of lower highs. All right, so there's the long setup, short setup. And I posted a couple of charts in Discord. So first of all, note that this cluster of levels here. The 48.59, 48.60 acted as support, and then price finally broke below that, and then the 48.59 C1 level acted as resistance. So support becomes resistance. And it really helps to have these SPX levels on your chart. It provides much more context and clarity, at least to me, having these levels on the chart and seeing where price might react. So that was the key for today, really, is watching the reactions at these levels. And note also overall for today, all the indicators in the subchart starting after around 10 a.m. have been moving lower. So after that initial long, all the indicators showing are drifting down, not really indicating, to me, not indicating any reason to take a long. Iceberg cumulative, since I opened Bookmap somewhere between 6:30 and 7 a.m. Negative. Also the same for stops. CVD is still positive. All right, so overall pretty bearish order flow, all below VWAP after about 10:30. All right, let's take a look at NASDAQ now. And pretty similar chart. Note the bearish order flow. In this case, CVD is negative as well. So stops, iceberg, CVD, all negative. All right, let's take a look at Hero now. Let's go to the NASDAQ signal. And for NASDAQ, I typically look at this signal, which combines NDX and QQQ options trades into one signal. I also take a look at the Mag 7, Magnificent 7. So let's start with NASDAQ here. Zoom in a bit. And note, in this case, compared to the S&P 500, the signal for NASDAQ was a little bit more clear, making a series of lower highs as traders were taking negative delta positions. And then this is really setting up a short, really anywhere from 10 to 10:30 in NASDAQ. All right, so let's go take a look at NASDAQ and Bookmap. Zoom in. Just a moment to adjust this chart. So 10 to 10:30, NASDAQ started making a series of lower highs. This is that QQQ 424 call wall, and this is 17,550. I got that label wrong. Sorry about that. I'll fix that. So making a series of lower highs, multiple entry points. Note again all the indicators in the subchart. Cumulative volume delta, stops, icebergs, all negative, showing large traders selling with iceberg orders, and also sell stop orders helping to fuel the move lower as traders started taking negative delta positions. So pretty similar to S&P 500 there. Uh, bullish rush up in the morning, and then the NASDAQ started to roll over. Let's take a look. Let's go back to Hero, and we can take a look at the Mag 7 signal. I'm going to zoom out. So what this chart is showing is a combined signal for options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. I'm going to zoom back in on this chart. So these stocks make up a very large component of the NASDAQ 100, also a large component of the S&P 500. I think it's a little bit more relevant for NQ, for the NASDAQ 100. And starting 10 to 10:30, the hero signal for the Mag 7 was also making lower highs, also confirming a short. So options traders and order flow and Bookmap both confirming a short in NASDAQ. And note at these turning points, the shift in order flow and showing them with the volume dots. Again, the volume dots showing market buy minus sell. Green dots indicating more buyers than sellers. Magenta dots indicating more sellers than buyers. So buyers on the run up, and then large iceberg order comes in, then aggressive buyers, price moves lower, more aggressive sellers, shown by the magenta dots. Magenta dots again and again and again, all the pullbacks. All right, let's take a look at some stocks, and then we'll get to the live market. I'm going to start with Apple, and Caesar mentioned Apple and Microsoft in Bruce's webinar this morning. That Bruce does a webinar on Monday, Tuesday, and Friday at 10 a.m. Very comprehensive coverage of order flow, mostly on ES, and then I'll talk a little bit about Microsoft and Apple. So first of all, Apple, and really the question was from Caesar about the CVD for stocks. I find that watching CVD for stocks in Bookmap is somewhat inconsistent. So I have CVD turned off. I have the subchart collapsed for stocks. So I mainly look at the hero signal for stocks. So let's take a look at Apple first. Let's go to Apple. And I'm going to zoom in on this and then separate out puts and calls. And we'll just go to the morning. So the orange line, sorry about that. That's an issue with Hero. Or the orange line is showing calls. A rising orange line indicates traders are buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. They were also buying puts. That's shown by the falling blue line. And it looks like in the morning at least, call buyers were driving price higher. And note they kind of abruptly take their foot off the gas. Just right around 10:45, they continue to buy puts, and Microsoft dropped sharply lower. So in the morning up until around 10:45, call buyers driving price higher, and then that reverses lower. Let's go back to Bookmap. And price reverses lower right at 195, just above 195. Note the liquidity in the order book. This is the heat map, shows a history of the orders in the order book, the limit orders. Above price, those are sell orders. And those sell orders can act as a magnet for price. In this case, they did. They were consumed, and then price reversed lower. And the key really was to watch Hero, watch the call line, and see what traders were doing with calls. All right, Caesar. So there's my take on it. Again, I'm focusing more on Hero for stocks rather than CVD for more consistency. All right, the next was Microsoft. Huge bullish opening print. At 400, let's go take a look at Hero now. Go to Microsoft. Oh, sorry. Can you hear me now? Okay, so let me go over Microsoft again. Sorry about that. All right, so here's the call wall, key gamma strike in Microsoft, acting as resistance. The call wall did its job. Traders were selling calls. That's shown by the falling orange line. Wrong tool. So traders were selling calls, really starting a couple of minutes after the open, and price reversed from the call wall, 400 call wall, key gamma strike. Note that Microsoft reversed higher as traders were stopped selling calls, started buying calls. Note for the day they have been selling puts also. That's shown by the positive notional value for the blue line, the put line. All right, thank you, Stephen, for the notification. Sorry about that. All right, Caesar says, yeah, it's clear the advantage you get with hero signals. So this is getting to what, sometimes it may be aggressive buyers or sellers driving price. I think in the case of Apple and Microsoft so far today, it's really been call buyers and sellers that have been primarily driving price. And Caesar says the orange line falling means calls are being sold, as it declines, right, not just that there's no buying. That is correct. So the orange line again indicates calls. So that's the signal for calls, and the direction of the line is in terms of delta. So a rising orange line indicates positive delta, so they're buying calls there. And a falling orange line indicates negative delta, they're selling calls. All right, just the opposite with the blue line. So anytime any line is rising, that's positive delta. So for calls, that means they're buying calls. For puts, that means they're selling puts. Then on the other hand, a falling blue line indicates buying puts. All right, so just think of these lines in terms of delta. All right, so there's Microsoft. Then one other stock I want to take a look at is AMD. Let's go to the total signal here. So AMD was really on a tear last week. Let's just take a quick look at, go back to Thinkorswim, a one-day chart for AMD. This is AMD last week. This is, let me zoom in on this. So this line right here, that's the upper weekly expected move last week for AMD. So very sharp move higher in AMD last week. And apparently today there was a downgrade for AMD. Note the call wall at 170, that's also the key gamma strike. Put wall at 167.50. So AMD opened above the call wall and reversed lower as traders were taking negative delta positions. And then traded down below the put wall at 167.50. Let's go to Bookmap, go to AMD. Sharp move lower in AMD on the downgrade. There's the 170. Note some consolidation at that level. And then it finally acts as resistance, like it should. Price moves lower. Then here's the put wall at 167.50. Consolidation around that level now may be acting as support. And let's go back and take a look at Hero again. Actually, I'm just going to leave it on the total signal here. So very strong correlation between options trades and market maker hedging activity in price action and AMD. Typical pattern, aggressive, in this case, options traders of the morning, negative delta, and then they take their foot off the gas, start to take positive delta positions, and AMD consolidates. AMD is one of those stocks that I find order flow difficult to read. Note a lot of green volume dots on the way down, and then on the way up a lot of magenta volume dots. So that is another indication of the value of Hero, showing what options traders are doing, not necessarily aggressive buyers and sellers. All right, let's I've got about 5 minutes left. If anyone has any stocks they want me to take a look at, let me know. Otherwise, I'm going to go back to the S&P 500 and take a look and see what's going on. So it looks like around this 483 level acting as support. Let's see what options traders are doing now. Go back to the S&P 500. Kind of a choppy hero signal here. Let's separate out puts and calls, see if we get any more clarity. Not really. Take a look at 0 DTE. So right now I'm showing options trades that expire, that all expirations. Today, tomorrow, next week, next month. Now this teal line is showing options that expire today. This is next expiry. For the S&P 500, this would be options that expire today. So SPX, SPY, ES all have options that expire every day. So note that this signal is a little bit above the all expirations, indicating that the 0 DTE options traders are a little bit more bullish today than all expirations. And one takeaway for today, this is pretty typical of the 0 DTE traders. Let's turn off all trades, so we're just looking at 0 DTE. Is the mean reverting options trades. Again, remember we're in a positive gamma environment. Positive delta up to potential resistance. Negative delta back down to support. Positive delta. Negative delta. Positive delta. So price responding up and down. It looks like now they may be taking positive delta positions again. Overall, though, of course, price is trending lower. Let's fix this. Go back to all trades. So definitely not a strong trend day. Price oscillating up and down with options traders, but as I pointed out before, the order flow is definitely bearish today. Let's go back to hero. Zoom out. So remember, including the before the cash open, SPX and ES, this highest number was right around, high number for the day was right around 4.5 billion. So with just the cash open, it is around 2.8 billion, still positive. So the notional value for options trades for today, both just considering the regular trading hours as well as all extended hours, is net bullish for the day, slightly bullish. Not near the highs of the day, but a little bit higher. Caesar wants to show the 0 DTE activity for Friday afternoon. Yeah, we can do that. So let's go back. We can change the date. So let's go to Friday. That's the start date. Then we'll go to Friday, the end date. So we're just looking at the 19th now. And then let's take a look at all expiry. Turn off all trades. So this is just the regular trading hours for Friday. And this number is positive notional value. Definitely driving price, but this is not huge. Let's take a look at take a look at all trades. So it looks like the 0 DTE options trades on Friday making up about half of the total notional value. So let's go back today. So there you go, Caesar. Yeah, Stephen, you can go back 5 days with Hero. So it keeps the last 5 days worth of data. So let's go back to today. Whoops. All right, so there's today. So it looks like Hero's making a swing higher. Oops, sorry about that. Go back to Bookmap. SPY 483 acting as support. And Caesar asks, is it possible for the lines to diverge, or the call buying and hedging activity always go hand in hand? So first of all, I tend to look mostly at the total signal. So I see puts and calls, and with the large cap tech stocks, Magnificent Seven, there's often a very strong correlation between options trades, hedging activity, and price action. And there are more factors in play for the S&P 500 and NASDAQ. All right, so Caesar says, meaning call buying will always be hedged with futures buying, and the cycle kind of feeds on itself. Well, first of all, for an index, for the S&P 500, call buying in SPY, SPX is typically hedged by futures. That's traditional. Recently, Spotgamma has talked about market makers hedging with 0 DTE options as well. I just kind of keep it simple and focus on futures. So, you know, the way I'm looking at this is when traders are buying SPX, SPY calls, market makers are selling the calls, and they have to buy futures to hedge their delta exposure. And for a stock, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. So in a positive gamma environment, I'm looking for, again, mean reverting price action. Let's just take a look at, let's go to the Vanna model, see if that provides some clarity. So this is the Vanna model for SPX. Very quickly, this chart is showing market makers delta notional on the horizontal axis, price on the vertical axis, price on the horizontal axis. The purple curve is what we want to look at. This is how market makers delta notional changes with changes in price and implied volatility. This is typical of a positive gamma environment, showing as price increases, market makers will need to sell futures to hedge their delta exposure. So as price increases in a positive gamma environment, market makers need to sell futures. Their delta exposure is increasing. On the other hand, as price drops, market makers delta notional is decreasing, and they can sell their futures. I'm sorry, they can buy back their short futures. So price rising, They're selling futures, price drops, they're buying futures. So they're trading against price in this positive gamma environment, which is really kind of reflected on this portion of the Vanna model. All right, so very up and down, definitely mean reverting price action today. Let's go back and take a look at Hero, then I need to wrap it up. Go to Hero, zoom in. Again, note the very strong correlation between hedging flow and price action, up, down. And this signal right here did provide a good leading indicator for a short, right around 210. We'll go take a look at that, and then we will call it a day. So we know right around here traders started taking negative delta positions, and then price reverses lower just below SPY 484 as aggressive sellers start to come in. All right, I need to wrap it up. I want to thank everyone for watching. Thank you very much for your questions and comments. Thank you, Caesar, Stephen. Thanks for the help. Thanks for the questions. And I will see you tomorrow. Thanks again. Bye.